Have you ever wondered how insurance can safeguard your financial future? Well, today we're going to explore just that. Research shows that nearly 60%, at least, of Indians do not have adequate insurance coverage, leaving them vulnerable to unexpected financial shocks. My research says in my experience as a certified financial planner, I have found that understanding the basics of insurance is crucial for every financial plan. Hi, I'm Taresh Bhatia, a CFP, Certified Financial Planner, and your go-to financial freedom specialist. I'm also the author of the Amazon bestseller book, The Richness Principles, where I share actionable steps for achieving financial success and independence. As a coach at the Richness Academy, I help working professionals, entrepreneurs, and families build wealth, reduce financial stress, and create a rich, fulfilling life forever. With my 38 years of experience in financial planning and investment, I've guided countless individuals through tax planning, wealth creation, and achieving financial freedom. My mission is to break down complex financial concepts into easy, actionable strategies that anyone can apply. So, whether you're just starting or looking out to fine tune your financial game plan, I'm here to help you at every step of the way. Welcome back to my channel, Taresh Bhatia. I'm Taresh Bhatia, your guide to financial freedom and a rich, fulfilling life. Today, we're going to dive into a topic which has been often overlooked: insurance. And whether you're just starting out into your financial planning journey or looking to refine your financial plan, this is the time to understand how you can protect your life, health, and all the insurance which you may need, or you have not understood what, where, how of insurance. So whether it's just that you're starting out in your financial journey or you're looking to refine your plan, understanding insurance is key to protecting your financial future. So that's exactly why insurance is important. Simply put, insurance is a financial safety net, I would say, which not only protects your loved ones, yourself, from unexpected events that can come your way and that could otherwise leave you in a financial distress. So there are specific type of insurances, each one of them, various types, and which I'm going to explain one by one, each one serving a different purpose. So before you make investments, insurance is the first step to look at. And I would say not buy insurance, take insurance with complete understanding why you're buying, what you're buying, and what purpose it's going to serve, what goal in your financial plan it serves or covers, and then understand and take up that life insurance. So whether it's life insurance, for example, which ensures that your family is taken care in the event of a untimely death of the main breadwinner of the family, and or it is just health insurance which covers your medical expenses. You must understand what are the various types of insurance. So let me break it down further, what type of insurance there are available which you need to be aware of on your journey of financial freedom. So the first one is, again, if I'm looking at the basics of insurance, the four components are the fundamentals, which I've just explained to you. The point number 2 is premium, is the amount you pay to the insurance company for getting the insurance coverage. Number 3 is your risk profiling grouping, whether you're a high profile into any high professional category, so the premium could be more, or you in a lower category where it may not apply, and what specific cover you're taking. With my experience of over 3 decades, I have learned that various kinds of insurance can have premiums which can change, not just what is quoted to you, but after the policy proposal has been accepted by the insurance company, it can change because you may have a certain adverse risk which needs to be covered before giving you the policy. So when it comes to increased premium after you have been quoted the basic premium, do not say no. Understand, accept, and then pay the additional premium if it is there. I have explained the various categories of insurance. Let me go to the first type, make notes. The first one is life insurance, and I'm going to explain 14 ideas. First one is where to buy, why you should buy. Now, insurance is a subject matter of solicitation, and it is to cover only if certain event is going to happen, which means that if certain death due to certain illness comes in, from this age to this age, then you need to be paid for, your family needs to be paid a fixed amount, and how much cover is determined by that fixed amount. So let's say 50 lakh rupees or 1 crore rupees, and you have taken a loan for education or for home. So you need to be covered that if your death happens, if that happens, then your family needs that amount to be paid to the company which has given you the home loan. So the premium is fixed from your age, let's say 30 till 20 years loan you've taken, and to cover that, the insurance premium is a fixed amount. Let's say for a 25 to 30 years old, the premium for 1 crore is 10,000 or 15,000 rupees. I'm talking about pure term insurance. Make note to take only that, so that if that event happens, the insurance company gives to your family that fixed amount of rupees 1 crore. 80 lakhs loan was there, and to 20 lakhs to cover the other exigencies. So from your age 20 till your age 60, you need coverage. Also understand till what age you need. So if it is not 70, because after 60, perhaps you don't need. The number 2 point is term insurance. Buy only term insurance. Understand how to buy, where to buy. Here I've explained the concept of income replacement, that if you are not there, you're the bread earner of the family, and your income brings that household expenses and all coverage. So without you being there for the next 20 years, the income replacement is the concept. And today at age 26, 28, you can buy a term insurance for very low premium, like 8,000 rupees per year, fixed amount for the next 30 odd years. You also get the income tax benefit 80C deduction for the amount of premium you paid, the 10,000 rupees premium you paid. So that is there. Plus you can do add-ons. And this deduction under 80C, check my separate video on income tax deductions benefits. The link is given below, and read on my blog, blog.tareshbhatia.com. Now, buying an add-on, disability or waiver of premium could be a good idea, because if there is a disability, you're still alive, then this waiver of premium means no further premium is to be paid. So that's a good idea to take disability add-on premium. Make a note of that, and you must disclose everything, whether you smoke or you drink, or there is an adverse lifestyle you have, or whether you have any health adversity past the last 8 odd years, any surgery or any complications or visits to the hospital, declare, because the insurance company may find out later to not give you or deny the claim to your family. Now buy ASAP. Yesterday, buy it. So have an adequate cover, find out the right premium, and find out what is best for your age. Let's say I'm giving example of 20s or 25 to 35 age. What is the best premium possible? And the premium will depend on 3 factors: your age today, what is the coverage you're seeking, let's say till age 60, and any adversity. As I said, the premium may change from what has been quoted to you, life insurance, and after these 3 factors, and the underwriter, the technical person in the insurance company, has gone through all the factors, the age, till what age you need it, your age today, and the adversity. Based on these 3 inputs, the right premium will be quoted to you, and you must agree to understand and pay the premium. And first, have all your insurances before investing. I said this again, I'm repeating this, but don't buy any other kind of insurance. No add-ons other than the one I've explained, and buy a life insurance only with this background in mind. Which company to buy? How do I determine it? I check the reputed brand, and I check the claim settlement ratio before I offer to my clients. So these 2 factors are important to me. I'm not name the companies because I would not like to bias your opinion at this moment. I want you to understand, and this is for education and illustration purposes. So this is the basic which I wanted to explain. If you like this till now, put in the comments below. Awesome. So number 1 was life insurance. Number 2 is health insurance, and what are the key considerations when you buy health insurance? I've got a separate video, check in the links below, and do read on my blog, blog.tareshbhatia.com, about the health insurance. How do you take it? what are the key considerations to keep in mind? So number one, health insurance. I've got 9 factors to explain. So while buying, you have to keep the following points in mind. What is the right age to buy? The right age to buy is when you have started thinking of it, when you want to have maximum cover, when you have the benefit of getting started with it with the maximum possible cover. Best is with the no claim bonus, you can start off and continue. The least premium which is possible today, that is to be taken up, and no claim bonus can go on increasing. Try and select on this criteria. Why do you need health insurance? Well, having separate from what your company is offering, if you are working in a private sector firm or you are a government employee, that may not be adequate coverage. So for adequate, ideal health insurance cover, consider these 5 factors. It will depend, the premium will depend on these 5 factors. Where do you live? Understand whether there is any e-medical bills which you can submit to get a claim, whether that is like, for example, heart surgery, and you need the bills to be submitted. What is the maximum coverage you need today? Whether you have children and would you like to. So an ideal health insurance would be depending on where you live, what kind of bills you want to be paid up. Let's say you are an individual who has got parents and children. I would recommend taking a self in today's current environment in 2024, self 10 to 20 lakhs, parents at least 20 lakh rupees and children at least 5 to 10 lakh rupees coverage. So this is an ideal coverage which ensures that these criteria get fulfilled when you are selecting your health insurance cover. Once you have understood why do you need, the next is what are the various types of insurances. So the various types of insurances, there is individual, there is family floater, then there is super top up, and then is top up. So you need to understand individual, as the name says, you are single. So take individual life insurance. If you're a couple in your early marriage, consider family floater. Examples are when you're a single individual with 1 or 2 dependents, children 1 or 2, then family floater is a good idea. But I would say don't include your parents, because the moment you include parents, their adverse health or their premiums would be higher because the premium overall would be taken from their age, not your age. So do not include them in your basic health insurance, a family floater, but consider all the rest of the family members in this. Adequate coverage in this year 2024 could be about 20 lakh rupees for all as a family floater minimum. And if you're taking 10 lakhs, then do ensure that you are covering individually everybody at least for 10 lakhs then. And make sure that you discuss this with your family and inform them. What is super top up and what is the difference with top up? Watch my insurance premium insurance video where I explain about health insurance separately, briefly, which means that if you've taken a health insurance for 20 lakhs as a floater or as an individual, then a top up could be above that value, and super top up is above 20 lakhs, whatever is the amount would be payable. So understand top up and super top up very carefully and understand all these types of insurances which you need to understand also. My next thought is, as I said, take only for yourself, and it should not be the same as your parents, because you can pay the premium for your parents separately. So don't combine them with your insurance, health insurance. Now, health insurance for yourself, I would say, other than what your company offers, these are the reasons I would say, because you may be part of a corporate plan where the features may be limited or the coverage may not be complete. Therefore, it's a good idea to have your own health insurance, even if they are including the kids or not, but you, your spouse, your children, maybe your parents. So if that can be included in your corporate plan, that's a good idea. You can always, therefore, add on any 2 more in the corporate plan. But what you get is what is being covered under the corporate plan, what the company has given. And this can get terminated when you leave the company, or you have a next company you joining intermittent period of 10 days, 20 days, you will not be having any coverage. Of course, cashless, you can pay only with one, the company one. So you can pay partly, you can pay the first company. First take your company given in health insurance, I would recommend that, and submit the originals. So you have to submit the original. Let's say 5 lakh rupees is basic coverage which your company has given, and your total claim is 10 lakhs. So 5 lakhs original you have to submit to your company claim, and then next 5 lakhs you have to submit to the own policy which you have taken. What do you keep in mind when you're doing this is that there could be an option of copay, like 20% first you pay. So check in the corporate, if this is there, then be careful and understand what is a limited coverage when it is being given by a company. So understanding what your company is offering, get a copy of the combined health insurance which your company may be offering, so that you understand the pros and cons. And as I explained, over and above that coverage, take your own health insurance. Now, once this is clear, I would say look at the restoration feature which some insurance companies are offering, which means that once one claim has been taken, the second time, whether it can be given to you or not. The restoration of the sum assured means that 10 lakhs is the coverage, you've taken coverage in the first year and that is over. Can the restoration feature also add on another 10 lakh rupees? Understand what are exclusions, that what is not going to be covered. And trust me, if it is exclusions with one company, it's a standard feature of exclusion that these are not covered. And understand the restoration feature, which is once in a year, one time for one illness it may be there, and the scope may be limited. So understand the restoration feature as such to understand what is being covered in that particular. Next point is choosing the best. So I get calls from my clients asking which is the best insurance company to take health insurance from. I would say these are the 7 points, make a note, which you must keep in mind when taking it. Number 1 is no copay, no limitations on the cap, or there should be no capping. They offer medical checkups. Is it a good idea? The advisor physically helps you or not when it comes to claims. Check your needs, what you actually need, which city, how much could be the nearest claim if going to a when going in for hospitalization. And it helps you in selection and the issuance also. So these are important and helps you in the claims also. The minimum cover, I would say, for individuals could be about 10 lakh rupees as of today. Understand what are network hospitals, understand how cashless would work for you, understand what maternity benefits are being offered if you need them or you do not need them. Understand what is the minimum waiting period for minor and major illnesses. Understand what is the claim settlement ratio of that company which is offering. Is it a great brand which is known for great claim settlements, and what are the features being offered? So these are about 9 points I would say understand when you are planning to buy a health insurance for your own self. If you liked it till now, put in the comments below. Awesome. Thank you. Now, my next coverage is that when it comes to health insurance, what could be the best avoidable points to keep in mind? Number 1 is ensure that there is no capping. Means that any amount above on a particular surgery, the insurance company will pay only 50,000, whether it's 80,000 or 1 lakh. So do not go for that health insurance company, whether it's a bait to tell you that no, this is less premium. Next is sublimits. Per surgery, there should not be like for cancer or cataract, you'll pay only a fixed amount, rest you pay. Don't go for that then. Understand if there is any room rent, that all billing done is according to your room rent, which means that you don't pay any amount for a room, single room, if you would like to take that. Once in a 10 years, you're going for unfortunate hospitalization, and things like copay should not be there. Any accident leading to hospitalization, what is the terms for that? And avoid any scams that will get you covered. Don't worry, everything will get covered. So you have to understand what are the deductibles in this particular, and this is my summary on best avoidable points when selecting a health insurance for yourself. What is a waiting period? Which means that up to 90 days normal, any claim which comes is not going to be paid. So it's a standard norm. Slowly growing diseases could be up to 2 years. That last, after we have given you the insurance. Example is hernia or joint replacement or any ENT issue. The next 2 years, this will not be covered. Any normal illness, 1 year normal, will not be covered. Any pre-existing disease will be mentioned clearly in the policy feature. It will not be covered. It could be 1 year, 2 years or 4 years. For example, a heart disease or any related will not be covered. So understand very carefully what is a waiting period and then only take that particular health insurance, not before understanding. Understand what are exclusions. Exclusions means you're getting everything paid from day one. Is there any list of exclusions? Is there anything which is not necessarily being excluded? Any medical hospitalization not necessary is not going to be paid. For example, it could be your checkup or any Ayushman treatment which you may be asked to undergo. Is it paid bill or not? It's a good idea to understand that also. Now, what is cashless and only on network, which means that, for example, you get reimbursement that this is a small city. Here, the cashless is not available. So you will go for your treatment, come out and put in your claim with all the documents attached and get what is called as reimbursement. Now, even in remote areas of India or where there is no network of hospitals, your option of claim reimbursement is a good idea to get covered. And this will obviously cover all the ailments possible. So make sure that you understand what is cashless and claim settlement. Final is, there is a checklist which I'm giving you. Understand, is this a cover for 1 year or is this a cover for 2 years? Because you can pay for 2 years if any benefit you think is discount is being given. Now check your insurance policy, benefits which are being given to you. I've just given this as a checklist. Take a screenshot so that you understand that I'm going to get all these benefits. What is the premium payable? Whether this I can do portability later on. Any pre-existing disease is being covered or not from day one. So understand this when you are considering and keep this checklist in mind when you're discussing with your health insurance advisor for taking up that particular. Now, how do you check that all these are given? One is that you've understood. Second is your insurance advisor has explained everything. The third is when you get the policy document in hand. That is the time you get 30 days period to understand from the policy document that whatever was explained to you, whatever calculations were done, are they given in the illustration in the policy document or not, and go online to check whether your policy is valid. Make a call to perhaps the toll-free number to understand that my policy is valid from when to when and my name is this. Now, when is the best time to buy? What are the best things to buy in an insurance policy? Again, take a screenshot of this. Check whether organ donor is also covered, whether ambulance is covered, whether all specific illnesses are covered, whether you need top-up, which means that maybe the first scope is limited, one claim is being paid or 2 times hospital visit for the same illness is being covered or not. Now, top-up means, as I explained earlier, which you can avoid. Better is to take super top-up. How? It would be preferred because any number of claims in a top-up, understand clearly that you will get only one claim top-up. So if your basic cover is 10 lakhs, you'll take another top-up of 5 lakhs. So one claim will be payable only. If you go to 2 times to the hospital for the same illness or another illness, it will not get paid because it has been covered as a top-up only once. So better idea to cross-check on super top-up, which means that any number of claims, that 10 lakhs plus 10 lakhs, base is 10 lakhs and additional deductible is 10 lakhs. So above 10 lakhs, you've taken a super top-up for 30 lakhs. So from 10 lakhs to 30 lakhs, any number of visits to the hospital, you get that 20 lakhs cover and there is no extra amount which you have to pay from your pocket. So remember, the deductible should be 10 lakhs and the super top-up is another 20 lakh rupees. So it should be the same as the base coverage. Now, when can you buy? Well, understand the terms and conditions of super top-up and buy on the date of renewal. It cannot be taken anywhere in between. I would say when it comes to the add-ons, whether you are looking at these 5 kind of add-ons within the base health insurance policy. Avoid maximum, buy separate, buy a critical illness separately, have a accident cover separately, have a hospital cash policy separately. Whether Ayush is covered, homeopathy is covered, most of the companies do not offer you worldwide coverage. But if you are having any illness and you need to be treated abroad, whether that's a preference for you, check on that. A snake bite, animal vaccine required, any free health checkup, whether it's worth or not. You are in a remote area, you need air transport, whether it's worth to get this feature, whether you need e-consultation with an expert of the insurance company, whether accident coverage is there, accident leading to hospitalization, 1 hour, 2 hour, half day, full day, understand whether that's covered or not. Any discounts on renewal being offered to you, any daily cash allowance, if it is being offered, buy it. It's a good idea. Understand whether OPD, doctor consultation, pharmacy or test are being covered, and whether you are going to get continuous coverage even after 60 plus. And consider maternity benefit if you are really looking for that benefit. So these are some of the features which you can keep a lookout for and say, let me understand this. Finally, I would say parents have a separate health insurance, because there is a very important point on the premium amount coverage. Now, why separate? Because when you are considering, so your approach should be what things to look for, not for your self floater, and they should be outside your self family floater. And how different corporate plans which you have got are not going to include or are going to include the basic health insurance cover to include your parents also. So find out that benefit before you are considering not buying. The next point is parents' probability is more, that their premium is more. Probability of your parents being included in the basic health insurance, so their premium is going to be more. So the amount of financial protection which you're seeking, like 10 lakhs or 20 lakhs cover, and their age of 60 plus, so this will increase the probability of their premium being higher if you include them in your basic health insurance. So take them separately, and their premium will be decided by the age, like 60 plus. And look at now for parents, look for 1% room rent, 2% or unlimited capping, or if there is any capping. So understand this feature when you are considering buying for them. Look at pre-existing. When do pre-existing get covered? And is there any waiting period, 2 years, 4 years? Say yes. So that at least after 4 years you get cover for the complete. And maybe from day one, can it be ported from another company which you are currently having for your parents? A family floater, don't buy for yourself. Unnecessarily, this will increase the premium. So buy only for them separately. And for a minimum of 10 to 20 lakhs as of today, I would say, as medical insurance is having a very high annual inflation effect of 15%. Now understand the no claim bonus, whether it is how much and how it can be covered. So the no claim bonus, which is being offered by the company as a portability feature, can it be increased from year to year? Do you get incentivized by having no claim? After 1 year, after 2 years, is it increasing every year by 5% on the same premium? And therefore it helps you to avoid small claims, and therefore it makes you understanding better on not going for claims frequently on your health insurance policy. These are 7 points. Now I'll explain the next one, which is what is the right policy for you. 8th point is, so do a small comparison, but do not try to not disclose any material fact known to you, any past surgery, any medication or any pre-existing disease you have. Explain that and consult only with a registered advisor who's perhaps iCard or you're verified in some way that he or she is a registered advisor. And in my opinion, experience says avoid online because you may not have a human speaking to you. Now risks are increasing every year. So you have to make plans which are different from any such approaches which do not cover the risk which are increasing, and the cover which should be doubled up every 5 years. Now, what if hospitalization happens? People think, let's buy only for when hospitalization will be coming to me. What is an ideal cover? I would say make notes for this. A floater policy, both your parents can get covered separately. If there is no co-pay and there is a good settlement ratio of that company, choose 1 year option. Choose 10 to 20 lakhs as ideal coverage. What city you are residing today, that is an important factor when the premium is going to get covered. Restoration of the cover next year if you've taken a claim. What are the maximum features which are possible? There is no room rent limit, no surgery limit, no upper age limit, and check on cashless hospitalization, and also check on what kind of coverages that particular city is being offered as a cashless. Understand which hospitals you need to cover, which you need to understand. Now, basic health insurance is what? Let's understand very briefly. Pre and post hospitalization, you will get cover 30 days before, 60 days or 90 days after you come from the hospital. Any critical illness, any medical expenses for which you have the bills payable, that will be getting covered. Any daycare surgeries like cataract will get covered. Home care, is it being covered? Pre-existing like blood pressure or diabetes is being covered. Yes, it is being said. And hospitalization, which includes illnesses and accident also. So look out for covers, insurance covers which offer this. My 15th point in this is the most important, checks. So just understand this 7 points here. Pre-existing diseases should get covered. No claim bonus should get covered. Consult or buying through an advisor only is what I would recommend. No limit on room. Portability and emphasis on features, not premiums, should be your criteria when you're selecting a particular insurance company. Post-hospitalization, ensure that it is being covered to you. Medical expenses, as I said just now, is increasing by 15% every year. So if you're salaried, you have another health insurance from your company, but when you leave, the pre-existing period goes off and your policy coverage, new policy, will not cover pre-existing diseases. So it's a good idea to get coverage today. Now, obviously, as I said, get a separate cover for your parents also. If you're liking all these features and benefits, do put in the claim comments below how you're liking this. Get benefit after all of this, whatever premiums you're paying for your parents and yourself in your section 80D of the Income Tax Act, because this is an additional benefit when you're covering your parents, paying the premium for them from your bank account, from your income. You get this 80D benefit even for parents. I've explained super top up also, so make a note of that to get coverage for that. So just to continue, recap, I'm talking about various kinds of insurance. I've explained life insurance, health insurance. Third is take critical illness insurance cover, which protects against major risks like cancer, heart attack, liver kidney failure, tumor, paralysis, blindness, which may not get covered per se as a critical illness, but it affects your cash flow because you get admitted to hospital frequently and your income generating number of days in a year gets reduced. For example, cancer, number of visits. It's a good idea to take a critical insurance cover for yourself and your major earning member of the family. Other covers which I would say we should look out for are insurance cover against any loan you've taken like home loan, education loan. Obviously, car insurance is mandatory. If you're traveling abroad, there's a separate policy for that called as mostly travel abroad. Home insurance, important when you are looking at securing your own home and the contents. Accident insurance separately gives numerous benefits. Do worthwhile considering when a separate accident policy, for example, burns or a snake bite or any accident leaves you incapacitated temporarily or permanently. So the important part is that your income generating capacity is going to be affected. When income generating capacity is affected, your whole health insurance, your entire financial planning can go for a toss. So consider the additional covers in health insurance, in insurance coverages. Whenever you're taking insurances, check out the tax benefits which are coming from insurance. Check out the no claim bonus (NCB) and whether the insurance can be ported next year. These are my final tips and ideas. I hope you have liked it. Do put in the comments below how you liked the entire presentation from me, which I worked very hard to bring to you. As we wrap up, here are four final few tips. Always disclose all relevant information when you're buying insurance. Hiding any facts can lead to claim rejections. Don't skimp through insurance coverages. Go through every feature and point. Don't try to just save your insurance premium, but understand what is important, what is required by you, what feature you would definitely need, and whether everything has been explained to you transparently by your insurance advisor or the person whom you are consulting with. And it is much better to pay a bit of more for getting a more comprehensive coverages. So don't just say that I want the cheapest possible. In my opinion, say I want the best possible. And I would say consult with a registered advisor if you are unsure about which policy to choose from, what are the features, how I can get benefit. So if you found this video helpful, give me a thumbs up, share it with your friends and family. Don't forget to subscribe to my channel for more such tips on insurance, financial planning, financial freedom. If you need personal advice or want to discuss your insurance needs in detail, feel free to reach out to me through my website tareshbhatia.com. Let's work together to build a financially secured future for you and your family. Thank you very much for watching this video, and I'll see you in the next video. Remember, understanding the basics of insurance is your first step towards a financially secure future. Always remain happy with what you're doing with your insurance, what insurance is now that you've got, and you are happy with what you have taken. Happy investing till then.